Hey everybody, how you doing? It's Bruce here, Stock Markets with Bruce, where we talk about the stock market in plain, easy to understand English. And today's video, I'm going to talk to you about 7 stocks that were written up about a week ago, about how well they did in 2020. These companies collectively gained value on the open markets to the tune of $3.4 trillion. Made for a beautiful headline, but I thought I might, explain a little bit about what's going on behind the scenes and maybe help you figure out whether this is a good thing or maybe these shares might be a bit overpriced. Could they be a little high right now? And I'll explain a little bit about some of the fundamentals of the 7 companies. So hang on and let's talk about what went on in 2020. There's a chart here about all about the Dow Jones Industrial. This is a 2-year chart. So this is showing you 2019 and 2020. And you can see how the Dow was going up nicely there in 2019, but in the spring of 20, down she went, and then she recovered again. The 7 companies I want to talk to you about are Amazon, Google, Facebook, Microsoft, NVIDIA, Tesla, and Apple. Now, some of you will correct me. Google is not the actual name of the public company anymore. It's now called Alphabet, but I like calling it Google, so I'm going to call it Google. The first company I want to talk about, Apple Corporation. Here is an overview shot of the new worldwide headquarters of this company. What an incredible structure this is. Apple has been on fire for a number of years now. Steve Jobs passed away and Tim Cook has taken over, and the company just keeps on making money. And we love the devices. I use the Apple computer. I use the phone. I have the iPad. I love the product line. Here is the 2-year chart for Apple from 19 all the way to the basically a couple days ago, 2020, the end of 2020. And this is post-split, and you can see the company has a market capitalization of $2.2 trillion. They earned $57 billion last year. And they went up in value $1 trillion, and they traded a 57 times PE multiple. Very high. Here's a shot of the Tesla factory I believe in Fremont, California, near San Francisco, Oakland area. This company has had the year of years for stocks. This has probably been the big winner of the year. You'll see the chart right here. Over the last 2 years, the company shares didn't do much in 19, but in 20, it took off. And even the correction in the early part of 20 didn't stop it. It just kept right on going. The market capitalization is now $670 billion. They lost $862 million in their last fiscal year in 19. They're making money now. They gained $594 million in market cap, and they traded an unbelievable 1,300 plus earnings. Amazon, another winner over the last decade now. The company just kept building out these gigantic facilities and hiring hundreds of thousands of employees. The stock has done well. They have crushed a lot of the retailers. The shares really gained in 2020. The market cap now $1.63 trillion. Earnings of $11.6 billion last year. $710 billion market cap gain, and they trade at 92 times earnings. That is still unbelievably too much in a PE multiple. Facebook, been around a long time. It's run by Mark Zuckerberg and his team, and they are scoring every home run there is. They own, I believe, Instagram, and they're doing very, very well. Here's a snapshot of the stock for the last 2 years. They really had a bit of a run in 19, but they took off after the crash in the spring of 2020. Market cap $778 billion. 2019 earnings $18.5 billion. They gained $193 billion in market cap this year, and they traded 18.5 times earnings. That is reasonable. That is quite reasonable for a company that is doing that well. Here is Microsoft, been around since the 80s. Bill Gates originally put this together with Paul Allen and others, and the company has gone through different management teams. There are probably now 3 or 4 different management teams have taken over this company, and they just keep right on rolling. The stock in the last 2 years gained a bit in 19, then leveled off in the summer of 19, but then in 20 took a bit of a shot early on, took a little dip, and then took off. Market cap $1.7 trillion. 2019 earnings $44.2 billion, up $480 billion in market cap, trading at 35 times earnings. A little rich, but not that rich. Now here is another stock that is a Wall Street darling, NVIDIA. It went public a few years ago. The shares trade very heavily, heavy volumes every day. Day traders are all over the stock because it can move in dollars. And buy 1,000, sell 1,000. You can make some money here if you can time it right. The company has a market cap of $323 billion. In 2019 earnings showing at $2.8 billion. That number is about to really grow. They gained $170 billion in market cap in this past year, 2020, and their PE multiple is at 85. Sounds rich, but it's a fast-growing company. I wouldn't be surprised if they start hitting $5 and $10 billion in earnings very quickly. That PE multiple will drop. Here at Google, owned, which is really the Alphabet entity, Google been around now for 25 plus years. And they have been making serious strides, continue to expand their business footprint. You can see here that the market cap, $1.2 trillion. The 2019 earnings, $34.3 billion. They gained $268 billion in market cap this past year. Their PE multiple, 34.3. After the crash in the early part of the pandemic, the shares have been on fire, and the company continues to add profits. All 7 of these entities are really on a roll. They are the market darlings. The pandemic has not hurt them as far as the market cap way things go. Apple, of course, everyone needs the devices for work and for pleasure. Tesla, of course, computers on wheels is what they call them, and those solar panels. Microsoft with its cloud system, absolutely phenomenal. Here is a little breakdown of all 7 companies combined. $8.3 trillion market cap. The 2019 earnings came in at $165 billion. Their estimated price earnings ratios plus over 50. Very expensive as a group, in some cases very expensive individually. The biggest offender of that would be Tesla at 1,300 plus earnings. But again, a computer on wheels, the people who buy these vehicles, who own these shares, they have a real loyal following here, and they're looking long term. But they might be holding the shares long term one day. If you're buying this stock in the 700 range nowadays, there could be a time where you might regret it, and you'll go, wow, I should have waited for him to come back, because what goes up sometimes does come down. And well, we'll see what happens. Here at YouTube, I'm, of course, a YouTuber. Google owns YouTube, and there's rumors that YouTube might become a public company by itself. They might spin it off. That could cause the Google shares to actually go higher. We'll, of course, be following that for sure. Apple continues to roll right along. Has a high PE multiple, but not outrageously high. Microsoft, fairly reasonable PE multiple. Facebook, I would say, has an incredibly reasonable multiple. And like I say, what goes up must come down. Watch these shares. Keep an eye on the Dow. Here we are again, the 2-year recap, where in 19 the Dow was gaining, but then in 20 we had that hiccup with the pandemic showing up, and the recovery has been unbelievable ever since, but it hasn't been across the board. The Dow 30 does have Apple and Google in there, and Microsoft. They have all, of course, affected the value of the Dow. Anyway, thank you for joining me today. I hope you found it interesting. Thanks for subscribing to Stock Markets with Bruce, and we'll keep on top of these stories. Take care, everybody. Bye for now.